Economic stuff is getting overshadowed today, but that's the underpinnings, I think, for the emerging optimism with this rally today.
Well, I do think that some of the data has been a little more optimistic than expected, and that's continuing to support the notion that the economy is not falling off a cliff and that the global economy may be able to stave off some of the more dire estimates of a global recession or negative outright growth. So I do think there's some optimism being baked in here that is helping to boost confidence, boost investor sentiment, and give a little uptick to the market as of late.
Of course, Eddie, another thing, given an uptick, everyone was waiting for this J.P. Morgan earnings reports. We know the financials have been really for a while now perennial disappointments. Not today. I mean, is this maybe a shift that we're seeing? And by the way, they're actually lending money to people. That's a novel idea for banks.
Yeah, how about that? You know, I actually came into the year, and I think I said this on your show in January, I was pretty optimistic on the banks this year. It was a contrarian call. They have underperformed the market. And I think if the banks kind of take over as new leadership, that'll be very, very positive for the market. So I think the banks are going to continue to be strong. Short term, they may have some concerns with the flattening of the yield curve, but they're well capitalized. And look, at the end of the day, this has been one of the most hated bull markets in history, and people have underestimated the strength of this economy. And I just don't understand what some of the bears have been looking at.
You know, Rob, what's interesting also is that obviously the stock of the day, without a doubt, is Disney, a huge move for it, taking out a high that was established on November 11, 2015. So we saw this stock essentially trade sideways for 4 or 5 years. Now it's breaking out. We also see buying and value plays right now. Is this a shift in leadership? Could this be a shift in leadership?
Yeah, I mean, Charles, Disney is a stock, I think, that people sold for dead a couple of years ago in favor of a company like Netflix. They've been making some huge investments in this company, and I'm actually surprised that the stock has underperformed so much because Bob Iger and the rest of the team really articulated what was going to be happening. And I think what's good news actually for Disney, though, Charles, is going to be bad news for Netflix. I think Disney's going to continue to lead here. If you look at the valuations of what Netflix is trading, you know, we did some work this morning and said, hey, what if we put the same multiple that Disney has on a company like Netflix? That stock will be trading at 88. The stock today is at $335 a share. So if you're owning Netflix right now, I think you need to look at things. But yeah, Disney, extreme leader, and I think the stock's going to continue to move higher.
Do you find it interesting, though, Rob, that it feels like the street now is okay? Listen, this price point, about half of what Wall Street was anticipating. Bob Iger is going to stay around until 2021. Yeah. And these are aggressive numbers, but ultimately, maybe they are pricing Disney differently because they're going to have trouble maybe being profitable with this aggressive push.
Well, I think so, but there's also some things like a much faster expansion into China that people weren't expecting. And when you look at, I mean, take a look at what Netflix is doing this year, Charles. They're spending $15 billion just on original content. It's starting to make that $70 billion that they spent on, that Disney spent on Fox, maybe not look that bad. And so when they're going to hit this year, they're going to be putting all their original films out there. They've got Fox's business that's out there. And let's not forget, ESPN Plus, they also have controlling ownership in Hulu right now. I think the future is very bright for Disney. I think they're going to have a great offering. And again, I'd be very bearish on Netflix right now. And I think you're seeing that play out in the market today.
Lindsay, I want to ask you about, you know, speaking of the future, it feels like we had sort of settled as Wall Street sort of settled on the notion that the Fed was on the sidelines. But can we have it both ways? Can earnings come in better than anticipated? Can the GDP grow faster than we thought it would at the start of the year, and the Fed remain on the sidelines?
Well, we can see better than expected performance of the economy depending on how low the bar of expectations comes down. And I think that a lot of street economists have maybe played down that hand, talking about a recession coming into play as soon as 2020 or possibly even by the end of 2019, we've seen some forecasts. So depending on where that bar of expectation comes in, the U.S. economy could outperform. That being said, we are looking for growth in the U.S. to remain in positive territory, around 1.5% to 1.8%. So still continuing the expansion, but at a noticeably slower pace. And this is in lockstep with what the chairman was expecting as well. He was very clear about that in the most recent press conference in March. But that doesn't mean that even if we do see positive growth, that the Fed needs further action, further back up in rates. Right. So I do think that at this point, the Fed will remain on the sideline, even if we do see continued positive positive growth, or if growth exceeds some of those lower forecasts for activity. So at this point, I think it's very fair to say that the Fed is out of the picture, at least in the near term.
And right now, the market's, the Dow's up 260 points, so they probably agree with you. Lindsay, thank you. Rob, Eddie, guys, stick around, because also fueling this market did offer more money than Chevron, and it was a bigger component of cash. And so some people are scratching their heads, but that means that Oxy's got to be on the prowl. It's got to be looking around. A lot of excitement about liquid natural gas and the potential to sell that around the world, maybe even make it a part of the ultimate China trade deal. So what are we looking at here, guys? Because crude, West Texas Intermediate, has been breaking out. It's around 64 now. Every time it gets to this level, we start hearing 75. When it gets to 75, we hear 100. Is that possible anymore, Rob?
Yeah, I don't know if 100 is possible. There's a lot of things, like you said, liquefied natural gas, and we could actually, like you said, Charles, I think a big thing is be a net exporter of that to China. So when you're seeing deals like today, I think that helps both in the trade talks. Also, not to get off subject, but the swine issue that's going on right now with pigs. Last week was the largest purchase that China's ever made of hogs from the United States. So I think all this actually bodes well for some of the trade talks, which is the big issue we're looking at right now.
Eddie, your final thoughts here?
Final thoughts are, I think short term, I would expect a little bit of volatility on the downside, but once China trade deal gets done, we're off to the races, and we will blow through the all-time highs this year in 2019.
This year, we still got a lot to go. This year soon, next month. This year, late in the year.
It's all about China trade. If you can tell me when that's going to get done, I can answer that question.
Okay, that gets done on June 1st. New high this year? Rob, new high this year?
Yeah, I think so. I think we're looking at about 3,100. Makes sense, about 17 times next year's earnings.
All right, guys, thank you both very much, Eddie and Rob. Meanwhile, folks, Amazon fighting